All right. Hello there, traders. My name is Elizaveta Belugina, and we start our weekly webinar devoted to the outlook for the major Forex currency pairs. Let's begin. So, our agenda for today will be, as usual, to analyze technical and fundamental factors which have an impact on the movement of the main currency pairs, I mean euro dollar, GBP USD, dollar yen, Australian dollar US dollar, and probably we'll also have a look at other currency pairs if we have time left. As usually, we analyze markets positioning, economic calendar, technical charts, and then summarize everything we have learned, and I provide you my trade ideas. So as for the markets positioning, we study a report prepared by CFTC, Commodity Futures Trading Commission. I'd like to remind you that there is a time lag and we have to be aware of this time lag when we use this data. This data reflects the market's positioning for the week which ended on Tuesday, October 18th. Actually, a week has passed since then, and this is a big time lag. The data are published on Friday, but still these figures are important in order to understand the bigger picture at the market. We can see that the aggregate USD long position has climbed to fresh multi-month high. Also, we can see that there was a significant increase in the net bearish position on the euro. And actually, the size of this position is close to $15 billion. What factors do affect the currency market right now? Which factors are the most important? Probably the main things which are driving the US dollar up are the divergence in monetary policy and some global capital flows. As for divergence in monetary policy, we can see that the expectations that the Federal Reserve will raise interest rates in December have risen to 68%, almost 70%, while about a week ago the expectations were equal to about 65%. There will be another meeting of the Federal Reserve on November 2nd, but neither analysts nor the market players don't seriously take into account this November meeting of the Federal Reserve, because this meeting will take place before the US presidential election on November 8th, and the Fed is not expected to act until we know who is elected America's next president. This is why the main speculation, the main talk is around the Federal Reserve December meeting, and during the past week, the market has begun to price a higher possibility that the Federal Reserve will finally raise interest rates after a year of inaction. I remind you that the last time the US Central Bank raised interest rates was in December 2015. Because of this increased expectations of the Fed's December tightening of monetary policy, US dollar managed to strengthen. We are watching US dollar index weekly chart. US dollar index tracks the dynamics of American currency versus the currencies of America's 6 largest trading partners. And we can see that there was firstly a big bullish break, and then the books managed to continue pulling US dollar to the upside. Actually, there is space for American currency to get higher, to approach January maximums just below the benchmark level of 100 points. Also, there were comments from the Federal Reserve Chicago Fed President Charles Evans on Monday, and he said that the Fed could raise interest rates 3 times between now and the end of 2017 if inflation expectations and labor market continue to improve. So hawkish comments. We know that opinions within the FOMC or the Federal Open Market Committee differ, but still every hawkish statement is currently bullish for the US dollar. There is more space for the US currency to strengthen as December is getting closer, because as we have seen, there is 70% that the Fed will raise rates in December priced in by the market according to CME. 70% is not 100%, so we have this scope for increase in the market's pricing of the Fed's rate hike. At the same time, we have another important event, US election, which will take place in 2 weeks. And as this election is getting closer, probably we'll see more calm situation at the market with low volatility and low trading volumes, as even large players won't take any sizable positions until their uncertainty, until the US presidential election has passed. According to Bloomberg, the volatility index has fallen to the lowest levels since the beginning of this year, actually since December 2015. This is the index calculated by JP Morgan Chase. And such decline in volatility can be explained by the speculation that the markets have already priced in enough of the US interest rate increase in coming months, and also the fact that Hillary Clinton is far ahead of Donald Trump in the opinion polls. US dollar has already strengthened on this as well. And such lead of Hillary Clinton increases prospects for stability of the currency market, of the US economy, and of global economy. So stability doesn't make market participants uncertain, doesn't make them worry. So volatility declined, and we see that after some sizable moves, the currency market is beginning to calm down, to settle down. Let's once again have a look at this expectations of the Federal Reserve's rate hike. Probably you are a bit tired to hear about these expectations of what the Federal Reserve will do in December, but I'm sure that the next 2 months will be still about the Fed policy, still about this December action or inaction of the Federal Reserve. So the possibility of the Fed's rate hike is something we will have to analyze just every week. We will have to monitor these changes according to CME. What else was interesting in the United States? Probably we have to speak about what events are coming, to have a look at the economic calendar. Here I have not only events which will happen in the United States, but also in other economies in the next several days. As for the US, we will have a look at new home sales on Wednesday, durable goods orders on Thursday, and the highlight of the week will be the US advanced GDP for the third quarter, which is due on Friday. The report will play the key role in the market's attempts to predict how the Fed acts in December. Most analysts are looking forward to the US economic rebound and expect GDP to rise at the strongest pace in 2 years. This is why I think that US dollar will be well supported until Friday, until this release. It will remain in demand despite the fact that the trading ranges of the American currency in the main pairs may become narrower. Reflecting this situation of lower volatility and the fact that the US dollar has already priced in much of the factors which play important role for its dynamics. I mean, the Fed's rate hike and the US election results. Volatile moves and strengthening in the US dollar index can be partly explained by the dynamics of the euro dollar, because euro dollar plays a big part in the calculation of the value of the US dollar index. The correlation between the US dollar index and euro dollar is high, and the market movers from the euro area which made the euro decline versus the US currency, and which helped the US dollar to show broad strength. Other important events include speeches of the Bank of England's Governor Mark Carney and the ECB President Mario Draghi. These speeches will take place today, and I think that they will have an impact on the currency market, so I recommend you watch these statements. On Wednesday, we'll have Australian consumer prices. On Thursday, the UK will release the first estimate of its GDP for the third quarter. And on Friday, apart from US advanced GDP, we'll have Japanese inflation data. So let's now turn to the currency charts, and we'll be discussing the picture, the technical situation for the main Forex major pairs, together with fundamental factors in relation to each of the currency in question. As usually, we start with euro dollar. As usually, we watch the weekly chart because it's always good to look at the weekly chart when you start your weekly analysis. At the weekly charts, usually you can see the picture more clearly, and to distinguish some important moves which will have longer term consequences. For instance, here we can see that after this month, the single currency fell below support line, which goes back to November 2015, and closed below this level. The picture turned bearish for the euro dollar, and the single currency found itself under the renewed bearish pressure. Looking at this chart, we can see that the former support levels around 1.11 now play the key resistance area for the euro dollar, and as long as the pair is trading below this level, the picture will remain bearish in the medium term. Euro dollar fell to 7-month minimums below 109 last week and remains here this week. In line with expectations, the European Central Bank left its monetary policy unchanged on Thursday. The market players will focus on the regulator's comments about the quantitative easing program. According to the ECB President Mario Draghi, the central bank discussed neither the extension of quantitative easing or QE nor the tapering of this program. So, in other words, Mario Draghi has said that the ECB hasn't discussed neither the increase of QE nor the reduction of the monthly pace of QE. The initial reaction of the euro was to the upside. The single currency tried to break higher. We can see this attempt on the 4-hour chart, and we saw that a spike to the upside was formed in the euro dollar. However, quickly the euro reversed to the downside, failed to continue its advance. And such reaction of the market means that investors still think that the ECB will do more easing to support the euro area's economy and encourage staggering inflation. These expectations should keep the euro under pressure. We see that here on the 4-hour chart, we still see the descending trend. The moving averages, the 50 period one, 100 period one, and 200 period one are in position showing that we have a downtrend here. Still, we have another speech of Mario Draghi today, as I have already told you, at 15:30 GMT. And there is an interesting opinion by Barclays. The bank says that Draghi didn't actually give us much information last week. He will have to clarify the situation today. And as at some point, the ECB will have to reduce the pace of asset purchases, either because the pool of assets the ECB can buy is declining, or because the euro area's economic recovery unfolds. And Mario Draghi may say something about the tapering of quantitative easing already today. Such words will make traders close some of their bearish positions on the euro. We'll see the short covering of this position, and the short-term reaction of the single currency will be bullish. On the daily chart, we can see that, as usually, I have these indicators. The indicator is called pivot line multi-time frame, and it is very convenient indicator. You apply it to the chart, and it stays at the chart. The levels are automatically redrawn each week because these are the weekly levels. The only thing you have to do, you have to delete these inscriptions to the levels, because they are not automatically remade. And once you delete this inscription, they renew and correspond to the new levels of the indicator. This light blue line is the pivot level. As long as euro dollar is staying below this line, the weekly outlook is negative, and the odds are that the pair will move to the next support level, which is located at 108.13 ahead of 107.45. However, we can see that on the daily chart on Friday, the candle was rather uncertain. The pair consolidated after the previous decline. On Monday, the candle was small, Euro consolidated after these two big bearish candles. And if Mario Draghi does sound less dovish today, then the euro will have potential for a short-term recovery to the pivot level at 109.25. And next we will have to look if they manage to take hold of this level to settle higher. The next resistance will be located at 109.93. All in all, we see that on the daily chart, the 50-day moving average went below 200-day moving average and is preparing to dive down below 100-day moving average. These are the bearish developments, and in the longer term, they will act as a limiting factor on the upside for the euro, and it is a sign that once the single currency tries to recover and shows any significant rebound, the sellers will potentially appear at this market, and they will sell the euro on attempts on the currency to rally. So the rallies will be rather shallow, probably not significantly bigger than 100 pips. The level of resistance at 109.93 is a kind of level to start watching for the signals which will allow us to enter new short positions on the euro. All in all, the medium-term picture of the single currency looks bearish, although we can see that on the daily chart, the euro is now rather oversold, and it's been a while actually since the euro has been that oversold. Let's track the dynamics back to the levels where it happened. We need a toolbar for that. Yes, looking at the daily stochastic indicator, you can see that the last time the euro was that oversold, there was the need for a correction to the upside. And this is why I think that in the next several days, we are vulnerable for increase in the euro to 109.25, 109.93. Below the level of below Monday and Friday's minimums, around 108.58. We will have our focus changed to this pivot support level I have mentioned. It's 108.13. These indicators are really convenient, and last week these pivot indicators did show us a good target to sell the euro. The euro was trading below the pivot level as it does today, and target at the first weekly support line was the right target to place, aiming at the decline of the single currency. Let's now have a look at other important pairs. we have British pound US dollar pair. Firstly, the weekly chart. Here we can see that British pound made an attempt to get higher last week, but this attempt wasn't very convincing and wasn't very successful. The gains were minimal, and the new week he has started with slightly lower levels of the British pound. What is important to know about the UK currency? The situation in the United Kingdom looks complicated. On the one hand, economic figures from the UK were rather positive. Consumer inflation accelerated from 0.6% in August to 1% in September, while the increase in the number of people seeking unemployment benefits turned out to be significantly lower than expected. On the other hand, traders are still concerned about the impact of a hard Brexit on the UK economy. Hard Brexit means that the UK authorities are more concerned with efforts to limit migration than with efforts to retain the country's access to the European Union's single market. It means that Brexit will be very negative for the UK economy, and as a result, because of these concerns of Britain's future fate, despite the fact that the process of Britain leaving the euro area, the European Union, hasn't started yet, and it won't start probably until March 2017, we see that even in the short term, even if we are trading on the weekly basis, still these concerns are important, and they simply don't let British pound to take off higher from this point. The pair surely looks oversold. Even on the weekly chart, we can see that the oscillators are very low, and this indicates that the decline of the pair has been too rapid. On the daily chart, we can see that the pair is surviving a consolidation. The daily candles are very small, and here is the pair where we currently have a very low volatility. We have these ranges of the pair between 1.1. Just a minute, just as we have done with the euro, I delete the levels and the new levels, renewed levels of the indicator appear. So pound dollar is holding in range between 1.2130 on the downside and 1.2328 on the downside. These are the first weekly support and resistance levels according to the weekly pivot point indicator. The pair is currently consolidating right at the middle of this range, and in my opinion, positions in British pound will have sense somewhere around the borders of this range. So we wait until either pound comes lower to 1.2130 or increases to 1.2328 to do this range trading. Bear in mind the fact that the market's short positioning on British pound is at the extreme levels, and the risk of squeezes to the upside remain. So risk management is very important for these currency pairs. Risk management is always important while trading on Forex, but for this currency pair, it is especially especially important. Nevertheless, even if we have some short covering in British pound and the pair attempts to get higher, we have here the decline in 100 period moving average on the 4-hour chart around 1.2375. We have plenty of resistance levels, and I believe that any recovery in the British currency will be very, very limited, and these resistance levels you see on the chart will represent a good opportunity to enter short positions for the British pound. We will watch the speech of the Bank of England's Governor Mark Carney today. It will be very interesting how Carney evaluates economic consequences of Brexit vote. Also, Britain will release preliminary GDP for the third quarter on Thursday, and we'll get more evidence on the impact of the UK's decision to leave the European Union on the nation's economy. All in all, traders have priced out the chances that the Bank of England will cut rates in the near term. So dovish commands of Governor Carney will make traders push British pound lower once again. We have heard already from Carney in the recent weeks that the Bank of England has become more tolerable to the UK inflation. The Bank of England is ready to allow Britain's consumer prices to stay higher, to remain even above the target level in order to support the economy, in order to keep doing monetary stimulus. This is a bearish factor for the British pound. So just it confirms the overall negative picture for this currency. Buying at the current level is still a very risky process. So once again, I recommend to sell either on the past decline or on its attempt to get a bit higher. Also, Britain, we await the decision of British High Court on the constitutional legality of Brexit, and the High Court will determine who is responsible for triggering Brexit, UK government or the UK Parliament. And much will depend on this. If the UK government is doing Brexit, then the process will likely go more quickly, as Theresa May has a rather strict and rigid position, and she expressed her willingness to hurry with Brexit and to make this come true. If the Parliament is responsible for Brexit, then it can take a longer time than if the government is doing Brexit. So we will watch the news from the UK. Also, there were some kind of tensions between the Bank of England and Prime Minister Theresa May, as May has said that quantitative easing was having an adverse effect on savers and pensioners. But the Bank of England's Governor Mark Carney replied that he will not tolerate the attempts of the government to influence the Bank of England's independence and to take part in the bank's policy. As for British economy, this data for the GDP for the third quarter are expected that after a strong second quarter, Britain's economy will slow down in the third quarter. The forecast is a 0.3% increase in the first quarter after 0.7% increase in the second quarter. So we will see how the British economy is getting along after this Brexit thing. The inability of the British pound to break above 1.2330 last week is a negative signal, and probably after this consolidation is over, the decline of the currency will continue to the levels below 1.21 towards 1.20 and even lower. Dollar yen, the currency pair is trying to get higher. The overall strength of the US dollar is reflected on this pair. The bulls are currently trying to take out the resistance at 104.30. This level represents us late August and September highs. On the weekly chart, we saw that after 3 weeks of growth, there was correction to the downside, but the new week is beginning in a good way for the US dollar, and there is some scope for the US currency to get a bit higher. On the weekly chart, such scope extends to levels around 105.15. 105.50. This is the potential for increase on the weekly chart. Let's have a look at the daily chart. Here we also renew our indicator, get new and better levels. We see that on the daily chart, the 50-period moving average is sloping to the upside. It is slowly but surely approaching 100-day moving average. The intersection of these lines will be a golden cross and a bullish signal, meaning that dollar yen is ready to test higher levels. The pair is currently trading above the weekly pivot line, which is located at 103.78. We are even above the first weekly pivot resistance at 104.40, and the next levels to watch lie at 104.98, 105 mark, and 105.60. So these levels of weekly pivot do correspond to what we have seen on the weekly chart, to the potential for this week. Also, we have this area of consolidation, which took place mainly between 103 and 104.50 marks, and break above this consolidation area will provide more scope for the US dollar to strengthen. US dollar here is affected by the factors which we have already discussed when we spoke about the outlook for the US dollar. The decline of the euro versus the US currency also helped the US dollar to gain versus the Japanese yen as well. Last week, the pair stayed below the resistance as there was some speculation that the Bank of Japan may slow its bond purchases and push back the timing for hitting 2% inflation target. So we can see that the pair has currently drivers from the US. It is strengthening as the US dollar is strengthening, as the expectation that the Federal Reserve will raise interest rates in December increase. But the pair doesn't get any help from Japanese side of things. We don't expect the Bank of Japan to ease policy in November. And this is why the advance of the US dollar versus its Japanese counterpart is rather slow. We can see that this 50-day moving average is rising rather slowly. And I think that the ascent of the pair will be very moderate and slow without some sharp volatile moves. It is a rather good place to buy the US currency, probably on some pullback from the current levels, as stochastics is in their overbought levels on the chart. We should be looking at the levels around 104 mark, probably a bit lower. Here we can find some good levels to buy dollar yen with some conservative targets around 105. All in all, the pair is now having support of 100-day moving average, which is located at just below 103 mark. And moderate strength of the US dollar is in line with expectations that the US presidential election will be without any surprises, and with the fact that the Fed is moving towards a rate hike in December. We will surely watch data releases from the US this week. I mean, unemployment claims, durable goods orders, and GDP due on Friday. Also, we will be watching some data from Japan, like inflation figures, which will be due on Friday. All in all, we have positive picture here, but with low volatility. And now a couple of words about Australian dollar. We can see that, let's have a look firstly at the weekly chart. Interesting to see that it is another week and we still speak about the pretty same levels in Australian dollar, levels around 0.75, 0.77. Last week, Australian currency tested levels above 0.77, but once again failed to stay higher and closed, actually close to 0.76 mark. This week, once again, we have an increase of Australian dollar, and there is potential for the pair to once again reach this 0.77 mark. However, I believe that 0.77 is the level where we should close Australian dollar long positions, and think about going short, targeting 0.76 and probably 0.7550. We will watch Australian inflation figures, which are due on Wednesday. The odds are that inflation data will come out lower than expected. It seems that the factors which are influencing Australian consumer prices, like rising underemployment, retail sector, and some other markets, still suggest that We haven't still reached the level where Australian consumer prices will gain at higher pace. Lower inflation is an obstacle for the Reserve Bank of Australia to start tightening monetary policy, and this is an argument for lower levels of Australian dollar, which has actually stayed rather high in the past weeks. As a result, the resume which we'll have for Australian dollar is that the pair can and probably will reach levels close to 0.77 in the short term, but on Wednesday it will be vulnerable for decline, and will be looking at 100-day moving average at 0.7512 level for support and for the level to take profit on the downside. What about other currency pairs? New Zealand's dollar is trading in line with Australian dollar. There was an attempt to get higher last week, but the pair had met resistance at 0.7245. This is 50-day moving average. We see that this moving average works rather well for this pair. It is a good support and resistance level for the New Zealand dollar. The pair went below 100-day moving average and is currently vulnerable to return to 0.7050 mark. US dollar, Canadian dollar tested 1.34 mark as the Bank of Canada left interest rates and policy unchanged last week. There was some weakness in oil prices, some consolidation, which limited advance of Canadian dollar. And all in all, we saw that on Monday, the pair with longer upper shadow was formed into 1.34 resistance. It means that it is not easy for the bulls to overcome this resistance level, and some retreat of US dollar, Canadian dollar is possible. We are looking to the levels below 1.33 to the levels around 1.32 as the targets. Support levels also lie at 1.3150. This is 200-day moving averages. Before the pair will be able to try for higher levels and make another attempt to overcome 1.34 mark. To get higher, we will probably need some new drivers from the United States, like higher than expected GDP growth in the third quarter. Gold prices are stabilizing, still trying to settle above 200-day moving average. Potential for gold, technical potential is limited as we see the bearish cross. Resistance line is located around 1,300 mark, and we believe that the recovery should stop at this level. The inability to show significant increase above 200-day moving average will open the way to the downside to the recent minimums around 1,240 and 1,226. All in all, gold is supported by the demand on physical gold, which had increased because of the holiday and wedding season, which is taking place in India. However, the strength of the US dollar, high yields, which are offered by American securities, American treasuries, decreased demand for gold, which actually offers no yield income for investors. And despite the fact that some short-term recovery is possible, The medium-term outlook for gold is bearish, as we do expect the Federal Reserve to raise interest rates in December. US dollar Swiss franc currency pair has breached to the upside. We can see that the pair is trading now above May highs, located around 0.9960. These levels, as well as 0.9920, 0.99, act as support for the pair, as US dollar Swiss franc pair has an inverse correlation with the euro dollar. So we can say that the outlook for the pair is bullish, and the pair is moving towards 1 franc per dollar mark, and probably even higher. One pair we have got as well is British pound, euro British pound. On the weekly chart, we can see a reversal pattern here. Probably this pattern is not very regular. The third candle didn't close very low, but still it reflects the inability of the euro to continue its rapid uptrend, and the necessity of some correction to the downside for this pair. As a result, we target levels around around 0.8720 for a decline in euro against of the British currency. This is it. This is the fundamental and technical factors for the main Forex currency pairs. And now let's sum up a bit what we have learned today and summarize the weekly trade recommendations. The US dollar is feeling rather well. The expectations for the Federal Reserve's December rate hike have increased, actually up to almost 70%. The market is also rather calm about the US presidential election, and this creates a favorable picture for the US dollar. Also, we expect to get good economic figures, good GDP data from the United States on Friday, and this will make the market keep the US dollar in demand in the coming trading sessions. The market is now focused at the monetary policy divergence between the euro area and the United States, between the Great Britain and the United States and other major central banks. Technical picture for the euro dollar is weak. We can see potential for further decline in the single currency on the weekly chart. Levels to watch on the downside for the euro dollar are 108.13 and 107.45. Decline below Monday's low will open the way down to these levels. As long as the euro is staying below 109.25, the weekly outlook will remain negative. Return to this level and higher to 109.95 is possible if Mario Draghi doesn't sound as dovish on Monday as he did on Thursday, and if the market doesn't hear much new from the ECB's president. Still, we recommend you to sell the European currency either on its attempts to get to 109.90 or on its decline below today's minimums, below the minimums of Monday. British pound is also under pressure. The Brexit concerns represent a heavy weight on the British currency. Of course, there are many short positions, and there is the risk of short covering and the increase of pound to resistance at 1.2330. However, this 1.2330 mark acted as a strong resistance last week, and there are reasons to believe that this level will hold this week as well. Decline in British pound, more dovish comments by the Bank of England Governor Mark Carney, which are likely at this point, will make the pound decline to 1.2130, and the decline below this level will open the way down to 1.2035 and 1.20. US dollar is gaining versus Japanese yen, and there is potential for increase to 105 mark and 105.60. This is the last weekly pivot support line, weekly resistance line, and this is the target. Australian dollar has gained after its unfavorable last week. Still, as long as we stay below 0.77, the outlook is bearish. There is the chance that Australian data on Wednesday will give the market another reason to sell Australian currency, targeting 0.75, 0.7490 marks. This is my take for this week. I hope that the presentation was valuable for you. And also, I wish you good trading week, good profits, and see you next Monday when we will discuss the currency outlook for the next week. Bye, and all the best from FBS and me, Elizaveta Belugina.